Pramod. This is quite a vibrant session. I think the previous speaker, obviously was able to lift the energy up in the room, and I think if we can do, half as well, at least me. I know you have the panache to do it, but I think we'll do it good. So welcome and thank you for coming down to Delhi to breathe our lovely weather and speak about this in this time. But, wanted to start off with a little bit, at the macro level. I think, global climate finance in 2023 reached a number of 1.9 trillion with projections of 2 plus trillion in 2024, of which about 8 to 10 trillion is needed annually to meet annual goals, right? So, and if you think about that from a financing perspective, where India is concerned, India has said that we need about 1.5 trillion by 2030, across all climate sectors, and about 250 to 260 billion is needed, from a clean energy perspective, right? So as we think about, numbers are not small. India has, as Honorable Prime Minister has also laid out the strategy around Viksit Bharat in terms of where we are today and where we can be. Wanted to get your views first to see, how do you see sustainable finance contributing to the broader Viksit Bharat 2047 goals, particularly in enabling inclusive and climate resilient growth?
I think, again, the reality is that no country in the world is safe from what's coming and what's happening indeed around the world. To my mind, this financing challenge, and each year I keep seeing, $1 trillion more or $1 trillion more being added to what is required for us to navigate this. So indeed, the financing challenge is only growing. I think India has done 2 or 3 things, especially for the corporate sector. Naturally, the government of India has also done sovereign green bonds. Reserve Bank has done various things around green deposit mobilization and nudging the banks towards more climate resilient finance. But for the corporate sector, I would talk about 2. I think one, there is indeed a green bond framework in the country. It's now almost 6, 7, 8 years old. We refreshed it last about 3 years back. We now have also a ESG bonds framework, which is actually GSS Plus. And I think each of these frameworks is meant to give both confidence to the investors and, I would say a framework for the issuers to come forward and tap these markets. So the frameworks are there, the mechanics are there, and I think we've borrowed best from, for instance, the GSS Plus actually goes directly to the ICMA standards, that's the International Capital Markets Association standards, in embedding their references. But we've also said there are other, maybe if ASEAN has a bond initiative, we can ride on that, and so on. So to me, we've created a globally accepted framework for Indian issuers. The happy part I can say is as soon as we notified, these frameworks and the circular, the next day a large corporate issuer actually issued such sustainability theme bonds. So we could see take up also. And I'm only waiting for corporate India to leverage more and more of these structures.
No, absolutely. I think there's innovation in products. I mean, I was chatting with you earlier. One of the things that, when we raised our most recent fund, we were probably a little surprised, but we were able to raise a sustainability-linked capital line at a greenium, right? So it's economically viable and easier to achieve. So I think it's good to see more innovative products there. I want to shift gears a little bit. I think you've obviously played a big role at SEBI, but you were also a board member at IFSCA. I think India has been positioning the GIFT City as and wants to create GIFT City as a global hub. We're looking at structures where a lot of the, private equity funds and other businesses being structured out of there. So as India is positioning GIFT City as a global hub for pure finance, how do you see the role of GIFT City playing a role to become India's go-to proposition, not just for regular finance, but for green finance?
So indeed, there's a stated objective at IFSCA to become the sustainable finance hub for India for sure. And I can tell you, even though I was at SEBI and serving on the board of IFSCA, I would keep telling them, I envy you. That's because, under the entire green bond framework, Indian corporates raised probably close to $1 billion, right? Or thereabouts. And post the sustainability bond, maybe it's gone up by another $500–750 million. By contrast, about $30 billion has got raised in gift city exchanges. So to me, clearly, it has a role, it has a place under the sun, so as to speak. The difference is that that's where Indian corporates are issuing foreign currency denominated bonds. And indeed attracting the pool of investors who look at green objectives, GSS plus, as I said, and therefore are coming in and investing in those. So yes, it's working well, and we are seeing Indian corporates come in there. I think the next leap will be indeed sustaining some of the technologies, some of things which you are showcasing here. I think may be relevant for global audience, which Gift City can also help nurture and project. So I would encourage, even the IVCA to sort of tell the exhibitors and people you fund to look at probably be going to Gift City and working out there as well.
Yeah, certainly. I think we have, even as we talk to our global LPs, I think this is certainly something that's important. So yeah, we will use the IVCA platform to try and transcend some of those aspects. Pramod, earlier you talked about GSS Plus. I just want to go back to that, right? So I think one of the things that, as you look at, ratings and things around that, the concern has always been around, how do you get unbiased data that is credible as well as, more importantly, comparable, right? So what improvements do you see, are needed for India's ESG ratings to ensure that they're credible and comparable? And, are third-party assessments or audits, is that something that can play a role, to strengthen the green and social commitments that we have?
So I think it will be good to step back and talk about what I call SEBI making a triple play on the entire ESG ecosystem, as it were. So one, Indian corporates were nudged to start issuing ESG reports, and I think that sort of gained currency. Now the top 1,000 listed companies have to publish ESG reports. SEBI went one step forward and said that with the glide path, so 150 companies and the next 250 and so on, there will also be verified or validated data that goes into the ESG report. So that's about 50 or 48 or odd KPIs which are now verified and published. The ESG rating ecosystem which SEBI nurtured and created, again, has required those ESG rating providers to look at these published verified data to actually do a lot of their work. So I think that's, again, a positive feedback loop that there's some initiative here. How do you build on that? The third leg to this triple pay is really the mutual funds which launched ESG schemes. They've been also told that at least up to 60% of what you invest must be in companies which publish this core ESG data, which allows ESG rating providers to be there. So, around investments, around rating providers and issuers, I think there has been a cohesive step, so as to speak. The role ESG rating providers also play, I think SEBI signaled both with the ESG bonds framework that they need not be confined to just rating people on basis of information. They can actually get into this assurance that you mentioned, being able to actually verify or do credentialing and so on. And I think it's a good step that regulated players are being encouraged to look at this. Without curbing the unregulated or people who are doing it with their own skill set, like Climate Bond Initiative and so on, who can do all this without having to necessarily get regulated. So I think, again, there is a mix and match which SEBI is following, which I hope bodes well for this ecosystem to shape up.
But do you see it more as sort of people checking the box, right? So a lot of the ESG reports we read are more activity-based as opposed to outcome-based. I mean, do you see investors, whether it's mutual funds, other investors, demanding that, there be more outcome-based KPIs versus pure just activity-based? Hey, we've done these 20 things, but what's the outcome?
I think it will be a coming thing, which will be that if investors start demanding these outcome-based, reports, I think corporates will shape up to that. I think, is there regulatory appetite to push for that? I think the regulator would sort of say, we have created a framework, let's see how it's getting utilized, rather than going and putting more pressure or putting more requirements on the corporates. I think we should see it more as an investor loop, which will create the outcome-based parameters to sort of evolve.
And just taking that again one more step further, just, are there instruments that you think that can be enabled, not just for this, but for CSR and philanthropic capital, right? Again, today, the way it works is, obviously you need to meet a prescribed percentage, but people are again, wishy-washy in terms of what they do. So are there some instruments that you think that can be catered or exist globally that can be borrowed and applied in these sort of situations?
So, I think I heard it from the chair of an advisory committee that advises us on social stock exchanges, saying India is the 31st country to adopt social stock exchanges. But what I can report here is that we are probably the only successful country which adopted social stock exchanges, because many of them petered out. So that, to my mind, is actually an excellent structure. It mimics, if you will, an exchange format for listing and so on, but precisely with charitable organizations, NGOs, non-profit organizations sort of coming forward. And India's created that instrument as well. What would have been a simple donation receipt is actually a ZCZP instrument which these non-profits can issue. There are social impact assessment which is done on whatever offer document that they put out, which is the equivalent of fundraising documents. So I would believe increasingly we have to nudge the philanthropies we support, saying that can you come into the social stock exchange and collect our monies that way, rather than as a philanthropic check that is cut bilaterally. I think that brings both a market discipline, brings verifiability, brings something as a showcase for broader set of public to come forward and say, listen, I want to support these causes too. I think India has made that stride around social stock exchanges. How much deeper we take it, we have an entire market ecosystem which supports equity issuances, bond issuances, and so on. And to me, it can support philanthropy as well, is I think the broader message which I would leave.
You're absolutely right. I think the social stock exchanges have the ability to unlock some level of transparency and credibility for the development sector. I think a push from investors is one, but do you see other barriers that are, as of now, the acceptance has not been very high, right? Especially amongst NGOs and social enterprises. So are there other barriers you see why they have not yet, adopted the social social stock exchange?
So, I think the challenge is similar to companies deciding to come and list in the markets. You have an offer document to bring up, to build up, you have a due diligence to be done, and so on. I think that kind of public scrutiny is probably what makes indeed a non-profit think maybe a couple of times before saying I will go up the social stock exchange. But I think if you are already doing it for international philanthropy donors or for domestic donors, I think it's a question of just doing a little more, and which allows therefore this equivalent of maybe a company doing a public issue, which is what really the non-profit would be doing. I wouldn't say we have a bad track record. I think over 100 crores has got mobilized by about 20 plus non-profit organizations. There are 50 more in each of the social stock exchanges which are going through the motions. So there is enough and more which is in a pipeline. And we don't count this pipeline when we talk about SME IPOs and main board IPOs. But I'm saying there is this number too, which probably needs to start figuring in our consciousness.
Thank you, Pramod. I think we've run out the clock. So I think clearly, there's a role that we as investors, whether through AIFs or, as other private equity funds or just general corporates can play, as you said, in terms of demanding. I think generally ESG, if I think about, private equity firms as well, 8, 10 years ago, ESG was sort of thrust upon us because our investors required us, demanded it from us, so it ended up being more check the box. But I think, over time, we've sort of, absorbed it, grown to love it, and doing more of it. So I think, the same, you're absolutely right, can be done by us as investors in Indian companies to also, promulgate the overall, aspects around sustainability, around climate. I think clearly, this is the need of the hour. It's not something that, we have a choice. I think it's something that we have to do from a future generation's perspective. So, with that, I don't know, Rajat, do we have time for questions or we don't? Okay, sorry, we're running way behind. So, Pramod, thank you for your time and this conversation. I think was certainly enlightening for me, and I'm sure for everyone in the audience.
Thank you again.